Good morning, Krupakar. Welcome to the morning session. Hi, Kiran. Good morning, Kiran. How are you doing? Kiran, you're on mute. We have a few people who have registered for the program, and we shall just await their login. Do give me 5 minutes, and then we shall start.
Hello,
Hi, Kiran. How are you doing now?
I'm just getting used to now. Far better than what it was earlier.
Hope things are better.
Yeah,
We shall just wait for a few more of our registered clients to log in,
sure.
and then we shall start.
Okay, no problem.
In the meantime, if anyone has anything else to, kind of take a call on or speak about, then we could use these 5 minutes to do that exchange while the others log in.
I was just having a point that there was a recent communication about having the name
ID. Yes,
same across all, right? So I
yes,
think I had to work out on that.
right.
Bank account and mutual funds have got Kiran Kumar NS, but
Hmm.
my PAN has got expanded initials.
Right.
So
So do send us a request on that. And then once we know what we have to do exactly, we are just awaiting the instructions. And we are making a list of all those who have that request with us. And as soon as we know what we have to do, we will get back with you. Get
yeah,
back
I
to you.
sent once. I got a reply saying that you need to apply on this portal kind of thing. Since I was not keeping well, so I took time for me. I don't know if some
Right.
help. Do we have any consultants who can do it for us on a fee?
So we are getting a list of clients ready at our end, all of them who are having a similar request like this, where somewhere there is a mismatch. And once we have the exact steps to be taken, we will be intimating you.
Sure, please include my name in that.
Sure, we'll update your name and that.
Thank you.
Hi, Siddhant. Hi, Vivin.
Hi.
Take another 2, 3 minutes. We're still not at 10 o'clock. Nice of you all to log in earlier. We'll wait for another 5 minutes. So, all of you all casted your vote yesterday.
Yes, we did.
Did your democratic duty?
Yes.
But we still, Bangalore still seem to have a voter percentage turnout of less than 60%. We also have viewers who have logged in on YouTube live, and though we can't see them here, a good morning to all of you who are watching us live over YouTube, and we shall start in a few minutes. We're still not at 10 o'clock. We've had all of you log in early, which is very nice, eager to understand what we have to share today, but we'll wait for 5 minutes for everyone to get in. Hi, Upasna. So we shall start now. Uh, Good morning to all of you. This is Sujata from Happy Investor, and we are here today with an interesting session to understand how you can benefit in term from your investments at a time when it's possibly an emergency and you need some kind of liquidity. So welcome to our session on how to benefit from loans against mutual fund. Uh, so today A lot of people have their investments in mutual funds, and you never know when life turns a little bit of up and down, and there could be emergencies when we need money for a short period of time. And people turn to their mutual funds to withdraw. But there's also another option where you can look at loaning a certain amount from your mutual fund investments. And that's what we are here to talk about today. So, have you experienced at any time that you wanted money and you sold your mutual funds and then the markets went up? Many of us may have experienced this at some point in time. And have you ever also felt that despite having investments, you can't use your money? These are two situations that many of us could have faced at some point in time, or we could face in future. So, what do you do at such times? Such times it comes in handy is what is loan against mutual funds. So, what does this mean? It actually offers you liquidity against your own mutual fund investments. It means it's facilitated with an app, a mobile app that helps you to lien mark your mutual funds and get an instant loan approval. You can enjoy the liquidity of your investments, which means you can access your investments while your money actually stays invested without any disturbance, and it grows as per the market conditions. So the funds are provided, this liquidity for you is provided through an overdraft facility, which you can pay back at your comfort with no prepayment penalties. The interest is charged only on the amount that you utilize and only for the duration that you use. That is, you are given a loan for an X amount, but you use only a Y amount of that for a certain number of days. So you are charged interest only on the amount you used and for the number of days that you used it. And the loan can be taken against equity as well as non-equity mutual funds. So how does this work? At any point in time, if any of you have any questions, please make a note. I'll take the questions at the end of the session. So what's the procedure and how long does it take? It's 100% digital process. You don't need to visit any office or you don't need to visit any branch. You don't need to come to Happy Investor or you don't need to go to a mutual fund AMC office, nor do you need to go to a bank. It's all sit at home on your phone. So there is an app which you've got to download, which we will share with you. You need to register yourself through that app. And then all your mutual funds will show up. You need to select the mutual funds. You need to complete a one-time KYC registration on the app. And then you got to lien mark funds, which are managed by two different groups. One is CAMS and one is FinTech. We will guide you through all this. Once you mark all that, then you verify the bank account via an e-mandate. And then you read and sign the loan agreement with an OTP authentication. And within a few minutes, your overdraft facility is ready, which means whichever bank account you provided over there, for the loan amount that you are eligible, it will create an overdraft account in your bank from which you can then withdraw the money. So we will help you through this process as to how you select the funds, how you register. Our team will assist you. And the maximum time that you will require to get this dispersed is anywhere between 30 to 45 minutes to max of an hour. And all this sitting in the comfort of your home or office. So important things to understand here. What is the minimum amount that you can take a loan, that you should take? The minimum amount that you need to take is 50,000. You can't look for a loan that's less than 50,000. Also, the maximum loan amount is 5 crores. Irrespective of how much you have, you cannot take a loan of more than 5 crores. On equity funds, you can get a maximum of 45% of current value. That means if you have 10 lakhs in your mutual fund portfolio, in equities, you can get a maximum loan of 4.5 lakhs. The minimum amount you need to take is 50,000. You can also get loans against your debt fund, where because of the nature of the fact that they are not volatile, you get 80% of your current value. So if you have 1 lakh, you get 80,000 loan on your debt funds. The interest rate is at 9.5% per annum, which in simple terms works out to 26 rupees per lakh per day. And because this is charged on a daily basis. So suppose you took a 1 lakh loan and you paid it back in 15 days, then you pay 26 rupees into 15 days as interest for that period of having used that 1 lakh. So the loan processing fee, which also includes a stamp fee and a GST charges. The stamp fee is basically an agreement that you have to sign online. And there is GST. All of this put together, depending on the combination of loan that you have to take, which is the schemes that you have to choose, and whether it is only equity or only debt or a mix of equity and debt, your loan processing fee can vary from about minimum of 1,700 to a maximum of 4,050. It will depend on the choice that we have to make for what you have invested and what is the loan amount you need. And the loan tenure is typically 12 months, which means when you process a loan, that loan is valid for 12 months and you are free to close it at any time. But if you extend it beyond 12 months, then it has to be renewed for another 12 months. But it can be taken for any period of time within that 12 months. So why should you actually avail a loan against mutual funds and not just redeem from your mutual funds for whatever you need? We'll give you some examples of how this works. So when you take a loan against your own mutual funds, you do not involve anyone else to access your funds. It's only you, and the access is immediate. You do not sell your mutual funds, so the incidental costs such as long-term capital gains tax is avoided, and you are also, there is no discomfort of selling your mutual funds and then reinvesting it again. And every time you sell, it involves paying tax on capital gains. So you avoid all of that. You also get the benefit that your units stay invested in the market and continue to benefit from the market movement, even though you are using your funds at that point in time because you need that liquidity. And staying invested means you are compounding your growth, even though you're getting to use that money for the short. You're using it for a month. Funds that have been invested for the last 5 years. So only because you want it for a month, you don't want to disturb it. You want to ensure that that 5-year compounding continues further. And you can also pay back the principal loan amount as soon as you have the funds. So there's no penalty for early payback. So suppose you took the loan and you expected to pay it back in 2 months and you already have the money within a month. You can pay it within a month and it's not going to be any kind of penalty. Then you're charged the interest only for the number of days that you used it. And this is ideally suited for short-term loans to a year. We wouldn't suggest beyond a year, but of course it depends on your requirement. And it can be done from the comfort of your home. Everything is digital. You do not need to go anywhere. Now, how does this actually work? How does this benefit actually work? So I'm showing you a live example that we experienced. One of our clients, Mr. Ramesh, because the name is changed, in October 23, needed about 20 lakhs for the down payment of his house, which he was going to replace into his portfolio within 3-4 months because he was expecting to receive some money from his parents. So we looked into his portfolio, and this was one option that he had, which is withdraw from mutual funds. So you withdraw a total amount of 20 lakhs. Now, he's been an investor with us for a long time. So when we looked at withdrawing 20 lakhs, it was coming with a capital gain of about 8 lakhs. So there would have been a capital gain tax that he would have to pay on that 8 lakhs, which would have varied from 70,000 to 80,000 based on the exemption limit that he has, plus the cess or surcharge on the gains. So this was the scenario if you withdraw that money. And actually during this period, which is from 20th October to 1st Jan, which was his loan period, the Sensex went from 63,000 to 72,000, which was a direct growth of 14%, which would have increased this 20 lakhs that we took out, that would have grown for another 2.8 lakhs. So if he withdrew, what happened in the end? He pays the tax, he pays the processing fee on the loan, he pays the interest on the loan, and he also loses out on the growth of that 2.8 lakhs, which happened during the time that he took out this money. So the option 2 was take a loan against this. So the processing fee would have been about 3,500 rupees. The interest would have been about 46,800 rupees at the rate of 9.5% for 90 days. Just 26 rupees per lakh per day. Own 20 lakhs for 90 days works out to about 46,800. So this 46,800 plus the processing fee is a total cost of 50,000. And he also gained this 14%, which is 2.8 lakhs, because he continued keeping his investments invested and didn't disturb. So you see the difference. If he withdrew, he paid the capital gains tax as well as lost out on the growth. If you took a loan, he incurred a cost of only about 50,000, while he still benefited from the 14% growth. So you avail liquidity and you continue to benefit from market growth when you loan against mutual fund. Another situation was when Anita wanted to withdraw 6 lakhs for booking her family holiday. And she said that she would put this money back in multiple tranches when she would receive her annual bonuses. So this is what happened. On 1st of April, she withdrew 6 lakhs. On 8th of April, she put 2 lakhs back. And then on 25th of April, she put another 3 lakhs back. So in the above, interest is not charged after 8/4, the 8th of April, for the amount that she put back, which is 2 lakhs. And again, interest is not charged after 25th April for the 3 lakhs that has been put back. And then on 1st of May, interest will be charged only for the amount that she has utilized. So suppose on 5th of May, Anita pays back 1 lakh, her outstanding will become nil, and she will be charged interest for the 2 lakhs and for the 3 lakhs for the number of days that she used those respective amounts. So hence the payback is also flexible. You can withdraw in multiple tranches and you can pay back in multiple tranches within that within the period of 12 months for which you have got that loan approved. Now, for example, she's paid back everything by May 20th. And then 4-5 months down the line, she needs another situation where she would want to access some money. That loan is still alive because she's taken it for 12 months. So without having to process again, she can again dip into that account and put the money back within that 12 months. So basically, it works like an overdraft account. It's like you've kept a deposit in the bank and you've made an overdraft facility on it, and you're taking out money when you want and you're putting it back. This works the similar way. Only thing is, this is invested in the market and hence it's growing at a higher rate than a deposit in the bank. So what is the ideal time for which you should take the loan? Short term, up to a year. Who can't take a loan? So anybody who's on a tax status of an NRI and their investments are under NRI category, they are not allowed to take a loan. HUF Karta, the Hindu, investments made under the Hindu undivided family ban cannot take loan. Anybody who's a non-individual entity, like if you're running a mutual fund account for a business, you can't take a loan on that. If it's a trust, you can't take a loan on that. If it is an organization or an NGO or something like that, they cannot take loan against. It's basically any individuals can take loan on their mutual funds. Any portfolio which has the tax saver fund, which is called ELSS, in that category, if you have units that are less than 3 years old, then that value will not be included into the loan limit that you can take. I'm free to take any question and answers now, in case you have anything to clarify further. We have some questions here with us, which I shall take you through first. And then if we have anything more beyond that, we'll put that too. What happens if I'm unable to repay the loan against mutual funds? In the sense that I do not have any other funds which I can use to pay back my loan. Then the mutual fund company will sell the units that you have pledged as much as they need to recover the units, as many units as they need to recover the amount that is outstanding.
And it is at the time, whatever is the value of the mutual fund, based on that they will liquidate, is it?
Yes. Can you unmute yourself one at a time and ask me the question, please? So Kiran, what you asked was, now, for example, I'll give it to you in simple terms. You have pledged 1,000 units and you have got a loan of 2 lakhs. You have paid back 1 lakh, but you're not able to pay back the remaining 1 lakh. So they will sell as many units of your mutual fund that you have pledged, which runs to a value of that 1 lakh balance. Does that clarify? And that will be as per the current value.
Current value. Okay, that's all.
The market value. So is loan against mutual funds suitable for the long term? No. Ideally, any period up to 6 months is optimum. In an extreme case where you really need the help, then it can be extended to 9 months. But of course, the loan that you take is valid for 12 months. What are the tax implications for taking a loan against mutual funds? There are no tax implications on you that you'll be taxed for the loan. But yes, you have the benefit that you do not pay capital gains, which you would have paid if you sold the mutual fund units. So that is the only implication on tax front. What happens if the value of my mutual fund drops below the eligibility limit? Like I explained earlier, if you have 10 lakhs in equity, you are allowed 45% of that value, which is 4.5 lakhs. Now, the market can go up, the market can go down. So you pledged worth 10 lakhs and you got 4.5. Now, the units that you pledged for 10 lakhs, if that value goes down to 9 lakhs, then your 45% has been breached. So either you have to add more units towards making it 10 lakhs, or you would have to sell some units to reduce your limit on the loan. Is there a minimum duration for which I have to keep the loan? No, there's no minimum duration. You could take it even for a week or even for 5 days. It all depends on your requirement. I guess the minimum would be 1 day and the maximum is a year. Uh, now, any other questions from your end? You could unmute yourself one at a time and then we can look at it. Does anybody have any other questions?
Sorry, any limit on the loan? Sorry.
The minimum loan that you need to take is 50,000.
Okay.
You can't take a loan for less than 50,000.
And what is the outer limit?
The outer limit is 5 crores. You cannot take a loan more than 5 crores.
Okay.
And there is an internal eligibility limit that when you are pledging equity funds, you get only 45% of the current market value. And when you're pledging debt funds or bond funds, you get a limit of 80% of the current value.
Thank you.
Yeah. Anything else? Anybody else has any other queries?
I just want to ask, Sujata, Upasana here.
Yes.
I just want to ask if there is, well, this is really insightful. The thing is, if you have a debt fund and that's gaining an interest of, let's say, less than, it's gaining an interest of about 8%, you're acquiring that interest for that fund. But if in case, but then if you take a loan against a mutual fund, you're paying a 9.5% interest. Are there cases in that you could possibly liquidate the fund instead of taking a note? This is just open for discussion. Because in most cases, I think it's good to take a loan against mutual fund. But this is just a probability.
Right. So that's what. It depends on your requirement. Again, if it's a short thing for, say, 1 week or 2 weeks, then you'll end up paying 26 rupees for only those 10 days.
Yeah.
Right? Which is, say, 26 into 10, so 250 rupees plus, say, 2,000 rupees for processing. So say it comes down to, say, 3,000 or 4,000 rupees, right? But if you had withdrawn, say that 1 lakh or 2 lakhs from your debt fund, and you had profit in that of, say, 30,000, 40,000, you would pay 30% tax on that because debt funds are taxed at your tax slab. So it all depends on the situation of the portfolio at that time, because please understand, when you withdraw money from mutual funds, it's always your oldest units in that basket which come out.
Okay.
Though I can choose the basket from which I want to take. Like I have scheme A, scheme B, scheme C, scheme D, and I can choose which fund I want to withdraw from. Within that fund, I have no choice of redeeming the recent unit vis-a-vis the older unit. It's always the first unit, the oldest unit that comes out. So if the oldest unit is coming out with a decent profit, then your tax will come up to that.
Okay, understood.
So it's the tax portion that you would save when it comes to withdrawing from debt fund. And a debt fund withdrawal makes sense for a shorter period of time because then you pay a lesser interest.
Yes, noted. Thank you.
Not for the long term. The long term of, say 3 or 4 months, then it makes sense to take out only from equity.
Okay. Thank you.
Any other queries?
Hello.
Yes, Vivek.
Which is better, withdrawing from a liquid fund or taking a loan against mutual fund?
See, it will depend on the status of your portfolio at that point. Like I said, if there is a reasonable amount of profit, then that becomes subject to tax when you withdraw. So we have to look at how much tax would you pay vis-a-vis how much interest would you pay. when it comes to withdrawing from liquid funds or from debt funds. And when it comes to withdrawing from equity funds, we have to look at the fact that, you should be not disturbing your equity funds for that time period because you're losing out on market growth. So when you approach us, we will look into the requirement, we will look into your portfolio and then suggest whether you should be withdrawing or you should be taking a loan for that amount.
Okay, thank you.
Any other query? Yes, Siddharth?
Yeah, suppose after 12 months we want to continue with loan, we have to pay the
Yes.
processing fee and everything again.
Yes, you will have to renew the loan for one more period of 12 months. And that means that whatever you paid as processing fee for the first process, that processing fee will be charged once more.
Right. All right.
But of course, like I said, once you've processed the loan, it's valid for 12 months. Even if you've paid back the amount of loan, you can keep the loan alive till the end of those 12 months. Because in between, if you were to need another tranche of withdrawal, then you can do so without having to pay the processing fee again within those 12 months. So that's what we suggest to all our clients, that even if you've paid it back, let the lien mark stay for those 12 months so that if you need to withdraw, then that account functions like an overdraft account for those 12 months. Any other queries from anyone? Else we will close the session for today. I hope the session was educative, informative, and also helped you to look at another perspective of being able to ensure your own liquidity from your own funds without having to turn around to somebody else. And, it's like we keep saying mutual funds are the best ways in which you should keep your funds for the long term, but it's also something that you can turn to in an emergency without having to depend on someone else. Thanks for being part of our session today. And we shall be posting the recording of this on our social media websites as well. You can always share it with your circles and you can ask them to reach out to us. And Happy Investor will be glad to help them in their journey on mutual funds. Thank you for being part of our session today on Saturday and have a good weekend. Thank you, everybody.
Thank you.
Thanks, Basil.